today's the single busiest day of earnings season. Yeah, the day where Wall Street's most likely to get it wrong, I think. For example, the way the market got Caterpillar wrong. This morning, Cat reported a blowout quarter, posting a monster revenue beat, tremendous $1.11 earnings beat. And that's off a $3.80 basis. They gave you 70% earnings growth, for heaven's sake. You might expect the stock to roar in response to those results, and initially it did, but then the stock reversed. One point it was down 5.6% for erasing most, but not all, of those losses. What is the problem here? Management was a little vague about the outlook for its future. Probably didn't help that we got a slow first quarter GDP print this morning, and we keep hearing about new fears about commercial real estate market. But I think the sellers failed to appreciate that Cat's going to make a fortune as all that federal infrastructure spend kicks in. But all I heard today was peak margins, peak orders, peak business. And Jim, be very careful because we're going into a slowdown when Cat typically does underperform. Don't take it from me, though. Let's dig deeper with Jim Umpleby, okay? Jim is the chairman and CEO of Caterpillar. He's got to learn more about this situation, which is complicated. Mr. Umpleby, welcome back to Mad Money.
Jim, it's great to see you again.
All right. Well, first, Jim, I got to tell you, when I saw the quarter, I knew that things were good, and I was thrilled. I could not believe how quickly people felt, you know what, that's the last good quarter. We've seen it happen. We saw it happen in 2018. People tell me it's just the same thing all over again. I say it's a different Cat. It's more of a secular growth Cat than we'd ever see in our lifetime. Am I just way out of bounds?
Well, thank you, Jim. And I want to first start by thanking our global Caterpillar team for an outstanding quarter, as you mentioned. Sales were up 17%, adjusted profit per share up 70%. We produced $1.4 billion in free cash flow in the quarter, which was $1.8 billion higher than the quarter before, and returned $1 billion to shareholders in the terms of dividends and share buybacks. But outstanding quarter. And one of the things we did tell our investors today during our earnings call is based on our first quarter results and the healthy demand that we see in most of our end markets, we feel even more optimistic that 2023 will be even a better year than we previously anticipated on both the top and bottom line. So business is good. Right.
Okay. So I want to make sure that you did not, as contrary to what a lot of the research I read, say, look, we're profit margins are peaking, and dealer inventories are not in the shape we'd like. So therefore, you got to understand, with weakness in China, we don't know how cloudy this future is going to be.
Well, we made a couple of comments to try to clarify some things. You mentioned commercial real estate in the introduction. One of the things we told our investors today, because so much has been written about that in relationship to Caterpillar, commercial real estate only represents about 1% of North American construction business for construction industries, which is just one of our three primary segments. So we got that out there today. And in the past, we've talked about the fact that China represents between 5 and 10% of our total sales. We told investors today that this year we expect it to be less than that range. But even with China slow, again, we feel very good about the year that we're having. Had just an outstanding first quarter. And, you know, we can talk about construction, which is certainly important. In the first quarter, construction industries sales were up 10%. But we didn't get any questions about the fact that resource industries, one of our other segments, was up 21%. Right. And energy and transportation was up 24% in the quarter. And if you like, I can talk a bit about the demand in those end markets as well.
Well, look, I would, first of all, I want to tell our viewers, I never in a million years until I met Jim would ever use the word secular when it comes to Caterpillar. Okay, it was always the most cyclical sink, swim stock and company. The reason why I'm saying that is Jim has done a lot of things in terms of return of capital, and because of the way our federal government has staged infrastructure spend, it's going to be many, many years for all that money spent. I don't want to be a dreamer, Jim. Do you feel that the Cat that you've created is not the old Cat?
Well, I am very proud of our global team. We are operating the company at a higher level. You know, we're producing higher adjusted operating margins and also higher free cash flow. One of the things that we told our investors today is that, you know, we had in fact released target ranges for both adjusted profit margins and free cash flow. And we told our investors that we would be in that top half of those ranges for both. We have demonstrated the ability to produce much more consistent free cash flows over time. You know, our range this year, the top half of that $4 to $8 billion range this year is $6 to $8 billion. And since 2017, when we introduced our new strategy, for every year except 2020, we produced between $4 and $6 billion in free cash flow. And even in 2020, when we lost more than 20% of our top line due to a pandemic-induced downturn, we still produced $3 billion of free cash flow. So I do believe that our team is operating the business in a different way, much leaner, much more efficient, and it's showing up in our results.
Yeah, I remember I'm old enough to remember the 84, 86 period where I could not believe how much money you could lose. And I know what cyclical is in secular. And what I want to mention, you gave a little bit of information about a trickle of the federal money coming in. But from the context that I have, which are all the GCs and the big engineering construction companies, they have not seen anywhere near what they thought they'd see because it's still tied up in the states. Are you seeing what I'm seeing, which is that in 2024, it will actually begin to be the big projects, the ones that need permitting? Those are not what we have yet.
Well, we do believe that the infrastructure benefit will play out over time. We are starting to see some benefit already from the states for things that are easy, things like road construction, putting more asphalt on roads. Those are the things that are already starting to happen. But because of permitting and a whole variety of issues that you're aware of, we believe that the benefits of the infrastructure bills will play out over time. Certainly some battery plants and chip plants have started to be built. Others are still on the books. So again, we do believe that that'll play out over a period of time.
Right, now,
but construction activity just isn't strong in the U.S. Middle East example is also quite strong.
Okay, the last thing I want to just touch on is dealer inventory. There was a lot of confusion on the call about where dealer inventories were. I thought they were not too hot, not too cold, which is what I want. There are a lot of people who feel that the dealers have way too much inventory, and so therefore there's going to be discounting. I look at it the opposite. We're saying you got to buy American if you get the money in 2024, and you're going to be ready with the Buy American machinery equipment. True?
For some products, in fact, our dealers wish they had a bit more inventory. With some products, they believe they have enough. So what we've said is that we expect dealer inventory to end this year about flat with the end of 2022. We expect dealer sales to customers to be up, our sales to be up, so we're quite comfortable where we stand. There are always puts and takes with dealer inventory, and of course, they're independent businesses. They make their own decisions there. But again, that's not a major concern for us.
All right, good, because, I mean, to me, if the stock was at 300, I could see profit taking. But the stock is so far down. It was amazing to me, the action today. I think it was wrong. I want to thank Jim Umpleby, Chairman and CEO of Caterpillar, for coming on the show and telling it like it is, because that's what we need. Thank you, Jim.
Thank you, Jim. Take care.
Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky is the limit. It's a fast-fire lightning round. Next.